Today I'm going to show you why the China pump is not over and why there is a possibility of a short squeeze as well. So even if the market does pull back, don't panic because there is still going to be opportunities. So without further ado, let's get straight into it. And looking over here at the crypto bubbles chart, you can see that on the week, of course, most coins are still running very, very hard. On the day, let's just get rid of that. On the day, we still have a whole series of green with some coins up as much as 30 to 60%. And then on the hourly, some coins are starting to pull back, but for the most part, they're still sitting green. And I'm sure many of you have noticed that those low cap and mid cap coins have been running really hard. And you may be asking why. We did cover yesterday why the market's running, and it is because of an increase in global liquidity. $6 trillion worth essentially has entered the system in the last 5 months, leading to the rally in risk on assets. So global liquidity is not just the US, as shown here by Tom. The liquidity within the world and global liquidity is now the name of the game. And it is definitely better to focus on that because there are big market participants in these Asian countries and they seem to be bidding. And will they continue to bid? That is the question. I think there is one more push higher. I'm going to show you the levels that I'm looking at. And we'll get into that on the lower timeframes. But another interesting unfolding and what could create a macro shift within the crypto market is Grayscale. And you have an update here from Andrew. He says, more chatter that Grayscale could be poised to win its appeal or case against the SEC on March the 7th, which of course is coming in very, very soon, 2 weeks away, which would be turning GBTC into a proper spot Bitcoin ETF. And then he says, legal minds believe that their brief is powerful and the court may be prone to pushing back on regulatory overreach. So what I have to say about this is not priced in. And it's mentioned over here by Andrew Kang. He says the same thing, no view on whether Grayscale wins its case against the SEC, but Bitcoin ETF is not priced in. And if the market becomes optimistic about it, then we can definitely rally into the event date. Actual ETF approval would have people screaming for all-time highs again. So basically, in summary, no ETF approval. Of course, we can't even talk about that yet. But even just this narrative starting to build up steam over the coming days could lead to the market to rally further, especially if shorts get squeezed. I'm going to show you why I think a lot of guys have started to short the market and why they're probably not going to get a free ride, but they're going to get punished first before the market goes down. I can easily see this coinciding within the next 3 weeks of this Bitcoin ETF, the anticipation of the SEC losing its case and pretty much a spot ETF coming into play. I'm not saying the spot ETF will happen, but the anticipation of that will create a rally within the markets. And if you do look here at the Grayscale Bitcoin Trust, that premium over there is, of course, still negative, extremely negative, and negative 46%. But it is ticking up based off of the lows that were made at 48%, almost, let's round it down to 49%, which happened all the way back on the 13th of December. Now, interestingly, you have this extremely negative GBTC premium or discount at least, which has been holding for quite a long period of time. I'm going to show you the volatility on Bitcoin and the stock market and how that's also remained low within this period of time. If there is going to be a squeeze and this premium or discount starts to close and move back towards the premium side, then you can expect that there will be enough juice in the tank to really get this rally going and people will start to talk about a bull run again. We're not quite at that phase yet, but there are interesting unfoldings. If you look at 𝗕𝗬𝗕𝗏, I like that name, 𝗕𝗬𝗕𝗏, it all rhymes every time. You got the MACD crossing above the 0 line, and that is on the 1 week chart. That is very, very important. So he says officially in bull territory and above the 0 line, the monthly MACD continuing to shape up nicely, and it's not that far off of the 0 line yet. Fred, come in, show your face here. Fred likes to come in and pull his face against. This is the co-founder of Crypto Banter, for those of you who might be new. But anyways, moving on. That's the weekly chart over there. If you look at the monthly from 𝗕𝗬𝗕𝗏, you also have the MACD, which is on its way up. Now, once this starts to cross the 0 line, at that point, I anticipate Bitcoin would probably be around 30K. If that gets to the 0 line, Bitcoin's at about 30K. Again, supporting that thesis that there would be enough juice in the tank to get an actual proper rally starting, there's a lot of room for this to run towards the upside. So do keep that in the back of your mind when you are placing your trades. Understand that yes, Bitcoin can go to 10 to 12K still. That was one of my main targets. But obviously, as a trader, you need to take each day as it comes and each week as it comes. If you're presented with new information, you have to flip your bias when the trend starts to shift. So although 10 to 12K could still happen, understand that right now the higher probability trade is looking to bid on the higher lows, so buy the higher lows, as opposed to looking to short all the way back down to 10 to 12K. And that's not off the table for me, guys, by the way. If Bitcoin rejects hard from this 200 weekly moving average and it breaks below 21,500, very quickly those numbers come back on the table. But right now, that is not the main probable move that's going to happen. It's not the main thing I'm looking at. So if you look at James, he shows you as well, stablecoin outflows into Bitcoin have once again commenced. Also in support that there is plenty of juice in the tank if a real rally were to get started. For now, we're treating it as a relief rally. Everything in line with the stochastic RSIs and the normal RSI on the bottom is in line with what you would see on those major macro bottoms. This is the vertical line over here, which lines up with all the macro bottoms, looks very similar to what we're seeing within this region over here. So you can see tick up in the RSI. This one took a lot slower. Here we had the bottom, retested that bottom level again in 2015 for a double bottom, and then a rally began. And then we had the 1st of January 2019, which was the actual market bottom, met by a break of that down sloping trend line, the red one, and we have exactly the same thing that's taken place over here. So far, so good. Everything is looking relatively decent for higher prices. Now, lining this up with the volatility indicator, this is the Bitcoin volatility divided by the VIX, so the volatility index for the S&P 500. Again, extremely low levels. Let's just quickly line those up nicely. Pretty much this whole area lines up with this major deviation, this bottom that we've seen, and the volatility continues to remain low. So yes, although you may think there's a lot of volatility in the market, according to this indicator, the Bitcoin volatility index, there is still a lot more left in the tank on a high time frame for real volatility to kick in. And it works both ways. I have to say it works both ways. That volatility could mean expansion to the upside or to the downside. Maybe that 10 to 12K target gets hit. Again, things become very bearish when you start to reject from that 200-week moving average and you break the next higher low down, thus creating a lower low. We're not at that phase yet, though. All right, moving on. So speaking of those moving averages, there they are. We have successfully held for a couple of days now above the white one, which is the 50 MA, and we are still yet to break above the purple, the 200 MA. But I do think that that's possible. The longer we consolidate against here, to me, the more likely it is that we'll have the momentum and the pressure to build and break through the upside. Now, the question is, once you do break through the upside, is it a fast spike up and then immediate rejection back down? Because I'm not making the claim that we're going to, I'm just saying that I think we're going to explosively break through this level. Then the next question remains, do we hold there and close above there? That I'm not so sure of yet. That might be a liquidity grab that happens around that 26, 27K and immediately comes back down with a big bearish rejection. So you need to be hyper focused when the market is at a pivotal point like it is right now. There's no one in this entire world knows exactly what is going to happen. It's all about playing the games of probability and understanding where your risk lies. Okay, let's look at Bitcoin over here. So in a nutshell, I'm on the 4-hour chart over here on Bitcoin with the different ranges marked off. So I've got all the different important levels, the Monday high, daily open, Monday midweek, etc., thus creating a range. Now, essentially what I'm looking at is this yellow trend line. So we had that strong sell-off on Monday, which created the Monday low, and then we immediately wick back up to basically start the candle again within the weekly open in line with the previous week's close. So you can see that is a very, very important point. That 24,275, you don't really want to see price come back below there. If it comes back below there on a closing basis, you probably want to start closing out any long trades that you have. But I think that was already the trap for the that was the, which trap would that be? That was the bear trap, right? So bears thought everything was breaking down and immediately spiked back up. Bulls closed out their positions over here as well. So they were panicking, thinking that it's going to go lower, and they're wrong. And now they've been left behind. Prices over here. What I think is going to happen next? You can see all these candles, right? A lot of players have had ample time to build up shorts around this region over here. So this is also lines up. Let's just move that up. It lines up with the previous week's high. It's also around a key monthly level. They have their invalidation around that 26K mark with a stop loss dangling above based off of, if I zoom out, let's just move on to the daily so I can show you. So most shorts have their stop based on this region over here. So these wicks over here, they're basically going to invalidate if price gets above that. Now, what I think will happen is we'll have one more spike up to grab that liquidity. I have a different liquidity chart, which I'll show you in a few charts time. But I think that this at the moment is forming an ascending triangle. You can see it as clear as day. Ascending triangles also have measured moves. Let's quickly see what that measured move would be. And let's just quickly change that. Solid line. So let's assume you break out from somewhere around here. Okay, measured move goes up to about 27,187. So very, very important. Keep that in mind about, let's just call it 27,000, call it even $27,000 if you do see a breakout. But the question is, are you going to close like that? So as long as this trend line doesn't start to break down, and as long as you have no closes below that weekly open, which is coming in again at 24,280, then all is good for the upside still. So 27K, where does that line up with relation to this chart? Mid-range is coming in at 26,630 on the Bitcoin weekly chart. You do also now have the 12 EMA crossing above the 24 EMA. That is a positive sign. You would expect that a slight range would form in the longer term perspective. You would expect something like this. So if you do get that spike up into this region, I do still expect some sort of a rejection, and then for us to come back down around here and form a range, thus giving these moving averages a chance to catch up in a healthy fashion. Meaning that if the bullish move plays out now and you miss out on that, it's okay, because prices most likely will return back to these levels, possibly even lower. So if you go straight to 28, 29K, that will be faded. You're missing out on a trade, not necessarily a longer term investment. I do think that those will roll over to catch back up to these moving averages for a proper test. So I hope that helps. A big driver is, of course, going to be the stock market. We are still watching this over here, and there is definitely a lot of pressure towards the downside for the S&P 500 futures. This is ES1 with an exclamation mark if you want to put that on your chart. Ultimately, we're looking for further downside if it breaks this into the 39.99 region. So call it 4,000 to make it even. That's a 1.62% move. Now ask yourself, 1.62%, what does that mean for Bitcoin? Since Bitcoin is a higher beta asset compared to the stock market, it probably means a 5 to 6% move to the downside for Bitcoin. Let's see what that would look like. 5 to 6% will go into this chart over here. 5 to 6% from here would put price. So that at that point, you've wicked now below this region over here, which would not be a good sign. The short-term traders will probably be stopping out of their longs over there. My ultimate line in the sand is going to be this one over here. I'm more focused on the 23,500 level. My previous invalidation was this one over here, 21.5. That was where I mostly entered the market, and my stop loss would now be raised below the closing candle of this. Some people may be more aggressive and have already moved up there. So do keep that in mind with your trading. Bitcoin dominance has started to pick up again. If I do start to see closing candles above that line, which is 44.47%, then I would anticipate that Bitcoin is probably going to outperform the altcoins, and you are breaking back above the mid-range with a target towards the range high. But so far, that hasn't happened yet. All right. I wanted to also cover over here that this tweet from Sentiment says the crypto market continues showing impressive returns with a large handful of projects that have added back 20% or more to their market caps in the past week. Bitcoin continues to tease the 25K range, allowing altcoins to continue to pump right and left. And I've said this probably every day now for 2 weeks. I'm still telling you, with the altcoins, definitely trade with caution if you are taking big positions, big as a percentage of your overall portfolio. Consider taking profits when they're on the table. And the reason why is because these are rotational plays, right? People are just moving from one coin to the next, one narrative to the next. At the end of the day, yes, we've been hovering around this level for a long time, but total 3, which is purely for the altcoins, right? It's the entire market cap minus Bitcoin minus Ethereum. It continues to remain in a downtrend, and there's just absolutely no way you can deny that, which means that any new money that is coming into the market is not actually really going into the altcoins, right? Because how much has altcoins appreciated in the last couple of weeks? Let's say since Jan, right? Okay, since Jan, you've had 13.8, let's call it 14% increase in total 3. Very, very little in relation to that 6 trillion that we've just outlined, what's going into the other markets. Okay, so I do still think that this will probably break out. Consolidating against resistance like this for long periods of time oftentimes leads to a big breakout, and then you'll create your first high. And that's okay. You don't need to panic. If that happens, you don't need to panic. So consolidate, big breakout. Let's say we close around there. Then that's fine. You're going to wait. That's a high. You now want to wait for the next high low. The next high low could form anywhere around this region, close to the mid-range at 358 billion. And therefore, you will still have an opportunity. I definitely believe that this year is going to be king for dollar cost averaging. If you ever want to preach dollar cost averaging, this is the year to do it. I think this is an accumulation year for Bitcoin, and trading could be quite difficult for a lot of participants that are new to it. Okay, daily close above here. I said yesterday you start to see a daily close above here. It's bullish. It increases the probability that you're going to have a breakout. That is in line with the ascending triangle, which I showed you on the 4-hour chart. The probability leans towards a breakout towards that 27K region. Could it happen today? Possibly. Could happen tomorrow? Possibly. All right, same chart over here. Let's move on to this from Moon. So Solana has been the talk of the town. 6,000 plus people are competing in the latest Seoul hackathon. So that's where they test their hardware, they test their software, and the Solana community is an absolute force. Do most layer ones even have 6,000 users in total is what they say? Well, if you look at Solana, it's competing heavily to regain this trend line. I haven't redrawn this trend line. This is the trend line. Let's go into the daily chart. This is the trend line that's basically held all the lower highs throughout. So lower high, plus you have the bottom of the range over here. Let's actually tighten this a bit and make it a little bit more specific. Okay, so you can see that key level, very, very key level. If you can flip this level, it's going to be bullish for Solana. That means Solana's next target is going to be into this mid-range at 32.50. If you clear that, you then have a chance to move all the way up to about $37. So keep an eye out on that. And if you go into the 4-hour chart, I'd imagine as well a lot of shorts are building here. And I think they're going to get squeezed. I really do. I think they're going to get squeezed. Very, very easy short trade to take. Now, keep this in mind, guys. When it comes to shorting, you usually don't have massive opportunities to build up short positions. Shorts, so you've heard the saying, right? You take the stairs up, and you take the elevator down. So when a short plays out, it happens very, very aggressively, very, very quick. Look at how many, pretty much you've had like an entire day. How many candles? Yeah, these are 4-hour candles. How many candles you've had a chance to continue to build up a short position over here. So both the bulls and bears are fighting for this level. So bears, obviously, they expecting that price will not reclaim this level, and bulls are expecting that it's going to hold above these wicks and it's going to break out. So I wouldn't be surprised as well if both get stopped out, but ultimately I do think it leads to an expansive phase towards the upside. Same thing as what I said about Bitcoin, whether it closes there or not is that I'm not so sure. But will it get there? I do think so. Okay, so here you have BXR. He says, we know that China and Hong Kong likes DOT. Here's the Polkadot ecosystem. We got LIF, REEF, ATA, PHA, AKA. So there's a whole bunch of them. Feel free to go check them out. If this Chinese narrative is going to continue to play, then that could be something of interest. But the reason I want to bring this up is mostly to look at the actual DOT chart. So let's move on to the daily. And here's DOT. Where is DOT within this broader picture? So take a look at that. So as like looking at this thing from high time frame, right? You've had obviously quite a brutal dump from what did this thing go down from top to bottom? Top to bottom, 92%. So that is within the region of what you expect to see in a bear market. Most altcoins go down between 90 and 99.9%. Currently from top to bottom, it's still 86% down. So heavily hit. See why you don't need to buy the exact bottom. You can rather wait for confirmation. Like if this thing really was going to reverse and you bought it down 86% discount as opposed to 94%, what difference does it really make? Not too much. Rather get a safe entry with a high probability trade. Now, what is this looking like? Well, this is looking like the main range low. So that would be considered a deviation and back into the range, right? Deviation, price deviates outside of that region, demand kicks back in, and now you're back within the range. You have your next higher low, back into the next range. Expect that there could be some sort of a pullback from here, and maybe you catch the next high low within the mid-range, and then you can start to target higher prices. So higher time frame, that's what I'm watching. Lower time frame, your moving averages are postured really well over here. Let me show you what I mean. I think I did bring this one up on yesterday's show. I said to you guys yesterday that most coins, once they had their golden cross over here, at the moment I have the 50, this is the 50, 100, and 200 MA or EMA, excuse me. So the 50 is the red, the 100 is the purple, and the 200 is the blue one. You want the 50 above the 200. Those are the main two that I look at. But ultimately, whenever it comes to trading and you're looking at EMAs or MAs, you want them postured in this angle. You want the short above the medium, above the long, with price above that, and with a healthy uptrend that's starting to develop. And you can see that you do have that. A lot of the coins rallied aggressively. As soon as the cross happened, you literally had like 150% move up. Now, how are you meant to catch that? A little bit difficult, right? This is a healthier sign of accumulation. And as long as it holds this, any retests that come back into that 100 to 200 EMA would be an opportunity to buy. And if you look at this, this 100 EMA is currently trending up towards that $7 region. $7 is the mid-range between these ranges. If you do see a pullback and price comes into that level, it could be an opportunity for you to get in for the longer term. Otherwise, consider dollar cost averaging. That's what I'm doing. When the market moves very, very quickly, I sometimes take the original position size that I wanted to enter into the market, if I know it's going to be for a long-term trade, a swing trade, or an investment, and I kind of stagger those orders in either dollar cost averaging, or what you can also do is you can set a grid. Now, grid strategies, a lot of exchanges use them. My favorite is on Bitget. Check out Bitget below. If you don't have an exchange account with them, there is a sign-up bonus. You're welcome to use that. You want to go through to trading bots. Under trading bots on Bitget, it will say trading grids. You can set your parameters for the grid. So you can say, hey, I'm expecting that anywhere within this region is going to be a long-term opportunity for something like DOT or whichever coin it is. And you can divide this into 10, 20, 30, 40 grids. So as price pulls into this, it will hit your buy orders. Buy, all the way down. And then once it spikes up, off it goes. And that's basically how I helped most of the community. I know there's a lot of you here who are new, but you can ask the guys in the chat over there. A lot of them were able to buy Bitcoin all the way down from 16,000 to 15,500 because I showed them how to use that grid strategy. So if you use that, it can be to your advantage. Okay, moving on. GMX, so the DEXs. Okay, GMX exchange activity has and performance on Avalanche right now is just insane. And it's basically outperforming Avalanche. So he says, what's the data saying? Since the start of the year, there's now over double the number of users using GMX on AVAX or Avalanche. So a big increase in these DEXs. And that's also one to watch, the DEX narrative. I'm going to go through a few of these narratives. So another one is Arbitrum. We have Optimism and Arbitrum, which are these layer 2 solutions. Arbitrum fundamentals are just insane. Transactions are surging now to all-time highs, and total value locked is making a run at all-time highs, with ETH still down 65% from its peak. Again, I mentioned this yesterday, but I want to mention it again. The layer 2s are where the money is going to be at, right? Especially if you do go into bull run, it becomes too expensive to transact on ETH. And therefore, participants will naturally look to the layer 2s as a solution to that problem, to still transact the same coins, but on a different chain. Now, what that means is, price-wise, is that those ecosystems are obviously going to go up in price, right? Because a lot of investors, the way that they look at the market, as a trader, right, you're looking at price action first. First and foremost, you want to see an uptrend, higher highs, higher lows for the long term. But if you look at fundamental investors, they're looking at things like this. So if Ethereum's price is going to go up, gas fee wise, and those participants are going to go here, this is what you're going to see. You're going to see an increase in the total value locked. You're going to see an increase in the number of transactions, and therefore they're going to deem it as a value investment. They're going to say, well, this thing's going up. I don't really trade price action, but I trade this, and they're going to buy into these, and therefore price action consequently goes up. So it's, again, what came first, the chicken or the egg approach. Basically, they work in unison, and they're both going to go up. Arbitrum TVL is on the verge of breaking its 2022 high. That is pretty bullish considering the market environment that we're in. These are the types of things that can turn into Luna to the upside. Luna to the upside, not to the downside. But you saw what happened with Luna, how Luna exploded in the last cycle towards the upside, making hundreds and hundreds of extra turns. These are the types of things that you want to be keeping an eye on. Okay, now 𝗏𝗏𝗏𝗏 has given his Arbitrum and wider ecosystem plays. I'm not going to go through this whole thread. He's like Miles. He writes extremely long stories, which most of us don't have the time to read. So out of the kindness of my heart, I'll give him a like, and then I'm going to retweet it. Feel free to go to my Twitter. There's the account handle. Type that in, and you can go and have a read through. He's listed a whole bunch over here. You basically want to look for those coins. If you can't find those coins and they're not listed, you need to find a way to interact with the Arbitrum network, and therefore in the future you may get an airdrop. Airdrops are big businesses, guys. Airdrops, I don't have time to focus on airdrops, but if you do have the time and you can, do it. You can literally make tens to hundreds of thousands of dollars on airdrops. It's unbelievable. It's free money. It just takes your time. All right. Again, over here, we have the main range. So the yellow area that we've outlined, and the ascending triangle at the top of that, which I've already shown you. Main resistance is coming in between 25,200 and 25,400. As soon as one of these candles closes above this level, that would be a breakout confirmation. And then you're looking at the measured move, remember, up to 27K, which for Bitcoin is about 6-7% from that confirmed breakout. Altcoins, you're probably going to get about 15%, right? About 3 times the value on that. And here you have Benjamin showing that shorters are willing to risk it all. So there's the levels that I've given you. It's a heat map, which is essentially outlining where liquidity lies. Remember, markets like to gravitate towards zones of liquidity. According to this red area over here, this is where the liquidity is stacked. Much more liquidity to the upside than the downside. We probably will come back for this downside liquidity, but not yet. So do keep that in mind with regards to your trading. My expectation is this liquidity is going to get taken. And that's it from me, folks. Please give the video a like. Do me a solid favor. Hit the like button. It takes 1 second out of your time. Helps the video get out. If I am shadow banned or the channel shadow banned, it gets that out there. Also, hit the bell notification and subscribe. And last but not least, check out both Bybit and Bitget in the description. It explains everything if you do take a trade over there and you sign up using the link, not only do you get up to $30,000 in sign-up bonuses on Bybit and up to $8,000 on Bitget, but you also enter into our Rolex competition where you can win yourself a Rolex. We're giving it away at the end of this month. So you only have, 8-9 days left to go. And then lastly, NordVPN, also one of the channel sponsors. Check them out. If you are trading without a VPN, you're crazy. You can get a sign-up bonus by using the link in the description there as well. That's enough shilling for today. I will see you guys all on tomorrow's video. Have a fantastic day. And remember, tomorrow's FOMC Minute, vitally, vitally important. Cheers for now.